So I'm Sandeep Manchanda. I'm business head, accelerated underwriting for life products here. And I'd just like the panelists to quickly introduce themselves in a few seconds. Nicole, you want to go next?
Sure. So I'm Nicole Myers. I am the underwriting propositions lead for the Americas for Swiss Re, and I work with carriers across the Americas building custom underwriting solutions.
Jason?
Okay. Hi, Jason Bowman. I head up a company called Compane Solutions, which is a consulting company. My background is in underwriting for many years, but then spend a long time in the automation of the underwriting process, working for one of the big reinsurers on their rules engine. And then 2 years ago, I set up my own consulting company, and I'm working with a variety of technology companies and carriers, just helping them with automation initiatives.
And Ajmal Malik, I'm Global Product Manager for EXL. I've worked software and underwriting for about 20 years, delivering solutions, and developed my own offering here, which is part of the EXL offering that we're now delivering throughout UK and globally throughout the US. So excited to be here, and Sandy, over to you.
Great, thank you. So I think we should start with the most relevant subject, right? In life sales right now, nobody can sit across the kitchen table anymore. We can't send the paramedic examiners over to take blood that we've been used to. I mean, I don't know anybody out there who's there to receive these paper apps, or the person looking over the other cube and say, hey, what do you think we should do about this? That can't happen anymore. And I was noticing that, we had about 8,000 deaths in the US every day, and the new data predicts 10,000. What are the mortality tables going to do? So it almost looks like the future has arrived today for life sales. I just wanted to get the panelists' view and have a quick discussion on it. What does it mean? And is it an opportunity? What kind of transformations are going to come from this?
When we first had this conversation, we had just kind of gone into, things had started to get real, right? So we had planned to be in the same room together for our first conversation. And the day before, we got the note that no one from the outside was getting in the building. So it's amazing how quickly the world has changed around us from our first conversation. And, we went from, we think that APS might be slowed down because, doctors' offices could be overwhelmed with things, to nobody's getting in your home, and the way that we do business has completely changed. So it's impacting, every area of what we're doing, what carriers are doing, how reinsurers are functioning. And, the future arrived really fast overnight. All of a sudden we're here and trying to figure out how to do it without all of the things that we've relied on, right? All of those in-person mechanisms.
You hear a lot of people talk about new normal, and and this is, is this how things are going to be going forward? And just personally with your own lives and how you do shopping and how you just go about things that were very different in the past. So, is this a trend that will carry on, or is this just a blip and we all need to get back to normal? And I think it's the same sort of discussion for, the life insurance business. Does this change things fundamentally going forward? Do things go back to normal? We can see this accelerating things that were already changing, like the customer engagement model, the way we did underwriting. I think we're things are being forced upon us now, which might mean we actually never go back to how they were before. This is the really interesting thing. I don't think anyone knows the answer, but it's interesting to see how this could play out. I think that's probably some of the stuff we'll be talking about in this session.
Yeah, there's nothing like a necessity, is there, for innovation? I think that's the key, which is kind of, we've been forced into this situation. It's something we wanted to do, I think, as an industry. We are lagging behind other areas. I think the technology has always been there. Technology has always been enabled to do this. I think the change is now going to be in the business processes, the reinsurer reactions, and I'm sure there will be lots of them as to their attitude towards data. I think that'll play a big part into it. But I think it'll be interesting to see the shift in technology. We've already seen that from kind of, companies that are ahead of the curve, already allowed remote working, if we use that analogy, and companies now that have had to accelerate that all of a sudden overnight. So companies that were ahead of that curve, had their technology ready and had the kind of ability to move, have been an easier transition. And I think that's kind of in the underwriting space. This will drive a lot of behaviors, and in the end, it will drive a lot of risk assessment and how that's done. But the tools of the future are all going to be all around, okay, is it portable, is it mobile? And certainly the assessment of risk, I know we'll come into it later, but around data, people, I think, in this new world are going to be more willing to share data. People are going to get used to, and we talked about it earlier, we're going to get used to, sharing results of blood tests. I mean, how many people are going to go through a COVID test in their home using something they buy off to predict whether they're actually positive or not? They will get used to these remote methods of providing data back. I think the change in behavior is going to be, okay, how do we, from the underwriting perspective, react to that data? I think that's going to be the main change.
Yeah. So that's the question, right? Do we hang on to everything that we're learning right now? And I think we are learning. The curve is steep in terms of figuring out how to get stuff done. And you're totally right that it's actually the thing that blows my mind is that all of the things that we're using have been there all along, right? Spikes in people going, carriers going out to electronic health record vendors or out to vendors that provide data for claims or laboratory results that are historical. That's not new, right? We've all been on the circuit for a long time with those solutions. But all of a sudden, the absence of these things that we've had, we're going to these other solutions, but they've been there. So I think that helps make the transition slightly easier, knowing that they're solutions that have been around, but we're learning very quickly how to use those. And that question of, can we rely on what's happening right now? Part of the issue in our industry is it's always a look back, right? You have to say, I made the decision, the best decision I could with the data that I had at the time. And you don't know until later if that was the right decision. I think we're shrinking that window, right? We're trying to shrink that window right now.
Can I ask you a question, Nicole, on this? Because I'm quite interested, just your views. So you talk about, a lot of these tools have been out there for a while, but there's been people that have been faster adopters than others. Do you see those that maybe are already up and running and have had more experience with that, this being a big advantage for them, and maybe even some of those, very slow to the party, really falling by the wayside now?
Yeah, and there are still some carriers who are even resistant to make any changes, right? They're just sitting tight and waiting until everything, ends, air quotes, to go back to normal. And I think this is really going to separate companies' ability out and what, and if they make it through, if there's consolidations and things like that, I actually do think the industry there'll be some contractions across all sectors, right? Just based on the way that companies are handling this. The companies that were positioned to move quickly or already leveraging these technologies and connected are the ones that they're feeling disruption, but it's not at that same unbelievably painful level. Even the way that they manage their own workforce, right? There's a lot of companies. I have a friend who works for a call center. In 3 weeks, they sent 3,000 agents virtual. They went from in office to virtual in 3 weeks, and he, was like throwing up from the stress. But they've succeeded, and now they believe they can double their workforce coming out of this. So if you think about that in terms of the way that carriers are handling things, you can come out the other side a lot stronger. But you have to go in with that foundation laid, right? With the ability to want to move quickly and kind of with those bones in place. So yeah, this is gonna shake out to be very interesting, I think, for carriers who are doing the wait and see.
So one of the things I was thinking about is just how the assessment of risk is changing right away. Because the importance of current data is now so much more important than historical data, at least in this little window that has been created. So people who've been relying on maybe some wearable information and other information of assessment of risk or even discounts, they're at a big advantage in this market. And I doubt. Do you think there are insurers who are not writing business at all? Because one is their process doesn't allow it. The other is maybe the risk level that's gone up. Is that of concern at the level?
Yeah, I mean, there are definitely carriers who aren't writing. They're certainly not writing at certain phases. And there are carriers who've halted their process, that if we can't complete the app, then we're just going to wait and see. So, and that kind of makes sense if you're thinking it's over in 2 weeks. But I think that as time has ticked by, you have to, rejig that strategy. But you make a great point about access to current relevant information as opposed to historical. And I don't know that we've had as big of a focus necessarily on that, right? We're usually trying to pull from databases. Wearables have kind of had this, we've had this weird love affair in the industry with wearables where, we're not really sure what to do with them and how to work with them. But this is a tremendous opportunity to power forward and look at that current data, right? The current behavioral data and wellness data that we've been dabbling with.
Yeah, I think, Jason, your Apple Watch is going to come in handy now.
Yeah, we mentioned this yesterday, and I got the new one for Christmas, which has the ECG on it, and I hadn't even done anything with it. But the other day I thought, I'll give it a go, and I was like, wow, this is powerful. Impressive. It can give you that instant sort of readout, and you just think, more and more of these type of technologies are coming to market. And for the life insurer, it should be really, rich data that we can use. I mean, one of the challenges is just the volume of data. I know in a previous project I looked at, we were looking at variable, and just the amount of data that could be collected, you literally couldn't, suck it all in and store all of it. It was so vast. So, I saw something similar on the driverless cars. Just how much data they capture. So it's really what are you going to store and what are you going to do with that data starts to become the key question. And how do you use that for initial underwriting, but how do you use it on an ongoing basis as well to assess the portfolio you have and see what you need to change. I think that's always been the challenge for our industry. You've had to wait 5 years plus before you really know whether you're writing profitable business. That hopefully will change as well if we can really make use of that data and find ways of continually assessing the mortality experience. That's a real.
Yeah, I think on the other side as well, I think it will change. So there's a step change, which is accept data, and there's a middle layer, which a median, which is kind of how do you use the existing tools to make underwriting remote as well, which is kind of maybe the first step for some organizations, as I see. So platforms being fully cloud-based means an underwriter can effectively, as you say, won't need to stop underwriting business. Likewise, assessing risk, nurses going to houses, doing blood tests, step on scales and all types of measurements. If I want an appointment with my GP now, they're doing a video call to assess, how I am, and then prescribing, prescription drugs comes through on my phone, and I kind of send it off to the pharmacy electronically, and they deliver it. So I'm not leaving my house to have an assessment done by my GP on a health risk. I see tools like that becoming more effective for underwriters and their screening exams, where you're just talking to them over a platform and being able to just interact as you normally would. And I think that behavioural step change, we're all getting used to it now. We're all sat thousands of miles away and running webinars, and we're getting used to this. And I think the world, as it adapts, will become more used to that. And I see that leading in. So maybe that's the first stage for some companies that haven't got to the comfort stage with data, but I think you'll see more of that emerge as well.
That was Jason, to your point on Apple. So Apple has done a lot to ensure privacy of data so that the user has control of the health information that stays on their apps and on their phone. And do you think that's going to become a very critical platform? Because if you have all that data stored, then it's only a question of permissioning, but then also a question of identity validation, right? Is it really your data or somebody else's data? And I don't know how fast it can mature, but the moment you can be sure this is your data and you can authenticate it, and I think already EKG is out there, your number of steps is there. I think it was at the MUD conference this year that they talked about how steps are more predictive than gender of an individual. So if steps are more predictive than gender, which is traditionally used for mortality, your Apple Watch data is more critical than maybe your EHR. I don't know.
I think the platform, the data gatherers, the companies that are aggregating and storing that data become, the real sort of channel for this. And, this is, Nicole, an area a lot of, having worked, in the EHR sort of space for the last couple of years. But that's, that's really ultimately where, we have to go and get that data somewhere, and we need it to be, organized correctly and structured and managed and you say all permissions granted. So that's the key building block for using this going forward.
The permission granted is something that that's a sticky subject, right? So getting access and then keeping access. This idea, there are some lawsuits happening in states right now with biometric data, and I think that being able to collect kind of biometric data is really powerful. There's some really interesting tools out there right now looking at, can I measure stress through the camera on your phone or your computer? But what's happened is, an individual feels like they didn't give permission to do that, and so now they're suing. Right now, they're going back and suing the company. So that's a bit of a dance with the data. If you can focus in on the right areas, and both made the point of, you don't want to just be storing blindly, right? There's so much data on that Apple phone in these apps. Like, focus on the areas that you need and use it, but be able to get the permissions and get people comfortable with the fact that you're using that type of information to underwrite them. And I think that there's already a disconnect, right? Applicants don't necessarily know what underwriting even entails. So, if you walked up to 10 people on the street and asked them, tell me what a life insurance, underwriting, they wouldn't know. But is there a creep factor that you have to watch out for? If you're like, we're going to scan your iris, like with your phone, and then we're going to tell you when you're going to die based on that. Like, there's a lot of messaging and user experience that goes around it, but it's there, it's right in front of us, and it's available, and it's powerful, right? If you can be transparent and not creepy, I do think you can bring the general public along as they apply. And I think that this is the type of opportunity where you can leverage that, because my father's in his 70s and he's trying to figure out how to use Zoom so we can have a virtual happy hour, right? People are becoming comfortable with things right now that they wouldn't otherwise have been comfortable with.
I think, Nicole, isn't the creep factor also different based on age? So as the insurers want to get millennials on and even younger people on, guess what? The creep factor is less, and those are the segments that are growing. So
I agree. I absolutely agree.
And with the creep factor as well, I think, if you look at the analogy that the banking industry has done it really well, right? Because there's several apps now and several companies that have spun up that will say, you're paying too much for your bills, give us access to all of your bank records and we'll sort everything out for you. Now, that's a booming industry now. Financial records are just as personal as anything else, not as personal as you can get. But you can see how the banks have made, have allowed you the ability to share the information where you deem fit through your apps, and it's working really well. And they make it such an easy process. Explain what's going to be exposed, why it's going to be used, and then you agree to share it. And you're seeing a rise of these apps, which says to me, actually, people are willing to share data. I know there's a step change between, your health condition and your financial condition. Most people are linked, right? So, but if you can see the trend moving towards, people being more and more comfortable to allowing their data to be shared if they are going to get a benefit out of it. I think that's a big thing.
Yeah. I think it's the messaging around it is key. And when you think our business is about people living, the longer they live, the more profitable we are. And I think the more we can get that message across, there's a strong alignment of interest here. People want to live longer, we want them to live longer, and what can we do to help them? And so that thing about we're not just sort of taking data so we can underwrite, we're actually taking data so we can, over the course of the policy you're holding, help you maximize your life expectancy. And I think the more we can communicate that and show we're the good guys here, we're trying to help, we're not.
And that's it. There's one more point, right? Traditionally, we focus a lot more on medical information, and there's a big personal exposure associated with that. But first we started with motor vehicle records, and then we went on to criminal histories, now financial indicators. We are finding that there are these risk scores based on current information of how you live and what you do that's as predictive or more predictive of your lifespan than your medical information in some cases. So that information is a lot easier to share than, I was in the hospital for depression 3 years ago.
Yeah. Well, and you can lie to your doctor. It's harder to lie to your tracker that's on your wrist every day, right?
Yeah, it's true.
I'm hearing about companies using medical claims data as well for underwriting, sort of quite actively now. Is that something, Nicole, you're seeing out in the market?
Yeah, it's I'm not going to say it's in its infancy, because none of this stuff is really in its infancy, but the databases are growing, so the hit rates are getting better with medical claims data. It's the volume of information coming back that carriers are struggling with. So again, if I send you 10,000 codes in one hit, you have to figure out what's noise and what isn't. And that's where it's really important to make sure you're platformed correctly, got automation or some sort of, predictive model that's running in conjunction with that type of data. But it's also a rich source of just kind of information on what you're doing. So it will list other doctors that you've seen that you might not have disclosed, which is important for later on if you feel like you need to order more records. But it's how you use that, because you don't want to just dump a bunch of codes in front of an underwriter and say, let me know if you see anything of interest. And there's millions of codes that could, potentially come back in different categories and subcategories. So it's tapping into the well, but it's also figuring out how to filter and properly automate that information.
Yeah, that's a really good point. I think this is one of the challenges when you get more and more data from different sources, and some of it, there's a lot of overlap. So if I got your medical claims data and I got your prescription history as well, there's going to be a lot of correlation. But there might be some things that, pick up from one or the other that are slightly different as well. And so it's how do you really take data from lots of different sources, compile it into meaningful, actionable, insights for the underwriter. I think that's going to be, critical sort of going forward, really, being able to consolidate all these different data, all this data from different sources.
Yeah, bring them.
And that's why we've been working. So from being a platform owner for EXL, that's why we've been working hard. Right? So on our platform, we consume lots of data already. Sandy mentioned most of them. Motor and vehicle records, your prescription history. We're correlating that against the answers they're giving and other feeds we're getting. But I think the platform will be key to actually consolidating and presenting something back to an underwriter. We're working hard on our underwriting workbench to try and consolidate and give views of data that are relevant. You're right, getting tons of data in, probably isn't the difficult part. Getting the data into the system and then presenting a consolidated view, because that you don't want to overwhelm the underwriter, right? Like you say, with 5 different sources, and it's their head to sort out on top of all the risk assessment they have to do. So I think that's going to be key. That's where we're investing in machine learning as EXL. We have expertise in that. But I think that across the industry is really going to help AI, machine learning in this area to help start consolidate all of this mountains of information we're going to be open to, and try and give the underwriter some type of informed decision. As you said, claims data is being shared. If we take in all of the wearables data, the sources we have, that's an awful lot of crunch, and electronic health records come on top of that, then you really are looking at amounts of information. And I think that the differentiator will be, where platforms enable the underwriters to see insights, not the underwriters actually getting all of this information in and then, here you go, guys, we've done all the work, over to you. That's not going to be.
I know, and like the electronic health record is interesting. There's HIE information that you could get. There's kind of the traditional EHR record as well, but you need to be kind of well sorted, right? So you need to be well platformed and have the right rules and automation and algorithms running so that you maybe you don't even order it. Maybe you can eliminate the ordering of those other data sources if you have the right kind of front end stuff happening, so you can start to save money and save time and maybe bypass the underwriter altogether if you do it right. So there's definitely, it's not just about tapping into that data, right? It's about using it correctly and platforming it directly, to your point. And it is going to be, the machine learning that comes into this that really, makes those things better over time, right? Let's make the algorithms better. Let's make the rules better. Let's have this process, because as much as humans will be involved, because we're in a human business selling to humans, the volume of information is just that's not a sustainable thing. Some of these records are, hundreds and hundreds of pages long, and it's repetitive information. It's the easiest way to burn out your workforce is to say, here's 300 digital pages to roll through, and most of it's going to be a duplicate, but we can't tell you how much. So you let us know, doesn't make for happy underwriters.
I was looking at an analyst report that was showing that in the short term, the underwriting review costs were actually going up.
Yeah.
Even the automation and data was being brought in. And I think we had discussed this before. Data is not the new gold. Data is the new ore, right?
Yeah.
Unless we have really good data scientists and modeling happening there is no gold to be created out of it. And I think, we talked about whether data is going to win the day or data scientists are going to win the day. I think as the breadth of data that's used for assessing risk expands, and there's a temporal change in what data is used, which means from history to current, data science is going to win the day. Because more and more we're going to have common data we're going to rely on. But how we actually sift through that and how we create an understanding from it and how we use new sources of data to assess risk faster and faster is going to win the day in the future. If that was there today in this COVID-19 setup, we would have completely winning insurance companies out there today.
Yeah, I think it's changing the way that we have to, look at automation, because, in the past we would really just go and sit with an underwriter and say, show us how you do your process, and we will then, get the system to do it, in the same way. We try and mimic an underwriter's sort of operation and their thinking and how they go through a case. I think just because of the volume of data we have now, and you say there's a lot of overlap and stuff like that, the data science piece really needs to get ahead of this and do more of that, modeling and compressing of the data. Because as you say, if you just present all of this to an underwriter as it comes in, it's just not manageable, and it will, really balloon out the time. It will make it a more difficult job rather than an easier one. So somehow we have to, the technology has to get ahead of this, and I think it is in some areas. You see pockets, like with predictive modeling and things like that, where some really clever algorithms have been developed using data. But I think that's just on the sort of cusp of it. I think there's much more of that that's needed, particularly when you talk about electronic health records and the claims data and all of that stuff as well.
Yeah. Jason had this great tool he used to give to carriers where he would actually show them how their underwriting process would slow down when you put in automation, because your underwriters would be focused on all the crazy stuff and they'd be ordering all these other things. And there's like this element of being stuck with all the complex cases, but also there's the psychology of like, I have to be worthy and I have to like do my job and be valuable. But yeah, you have to think about kind of that full, how do those algorithms, how do those things affect that full process, or your costs go up or you will slow down. Managing all of that data and then managing, the humans that are left in that process is important too. The unintended consequences.
Yeah, as a cultural part.
I love the.
On how an underwriter adapts to this new environment, and some I know have come to a point that said, right, I'm done. It's time for me to move on and like fishing or something, and find another way to spend the time.
But we did.
Some embrace it, and I think that's.
Yeah, we did talk on the last webinar about kind of the role of the underwriter changing, isn't it, in this whole new world? And Jason, maybe you want to comment on that, because we talked about kind of the custodian. They become the custodian of the process more than anything now.
Yeah.
And the skills and the things that an underwriter needs to get involved.
With like the automation. So some markets are really highly automated, where you probably get 80-90% of the business is done through a rules engine. The US market isn't really at that point because of the much more forensic sort of underwriting. But we've seen, say, in some of these markets where underwriters have been part of changing, bringing that change in, and they've been a key stakeholder in helping bring in these technologies. Or sometimes, they've been on the other side of the fence where they've been holding it back. So I think, again, it's down to a cultural thing, it's a mindset thing. Do you embrace these new things, even though they're messy and they're going to take a while to work out? Being involved in that and shaping that change. And it's been great working with Nicole. She's definitely one of those underwriters with that mindset. And the more, there's many of them out there now. I think it's great, and it is it's always been an opportunity. That's always been my sort of view of, automation, is it opens up new, worlds for the underwriter. I mean, when I was first underwriting, just the thought you could pull somebody's prescription history in real time and get all that information, it would have been like a dream.
Yeah.
So, just look on those things as, enablers and, be part of shaping that change.
And
I was just going to quickly point out, I'm also seeing this big blurring of lines between functions. So underwriting as a function is now entering into the distribution side and marketing side. They have to provide the insights. They have to understand, which channel the business is coming from and work closely in that way. And then work closer with the actuarial science. It's not that they get the parameters. Guess what? They now sit down with the actuaries and decide what the parameters are going to be. So it's a different world. It's almost that underwriting has to spread to other functions. It's not a distinctive function anymore. And that's a radical change, because all the companies have been organized around these entirely separate functions and silos.
Yeah, that's really true, actually. There in so many of these other areas really need a sprinkle of underwriting, right? So product and actuary and the sales, everybody kind of needs a sprinkle of that underwriting. And it helps because you're actually pulling like the behind the scenes kind of customer service thing that was happening in the dark into the front and into the light, right? Into the structure of all of these other things. And so as much as we talk about the changing role of the underwriter and the need, we're still in kind of an emergency situation with underwriting talent right now. It's actually really hard to find underwriters. that have some background in underwriting but want to come over and do R&D or do these special projects or work with salespeople. And it really is desperately needed. So hopefully lots of underwriters out there hear this and know that there is a wide, interesting world of people who want to hear their opinion and that they can work with, because we need you. We need more underwriters out there.
Yeah.
Helping to design that process.
And I think that team piece that you mentioned is really key as well. When you look at some of these like insurtech startups or some of the newer carriers that are out there, they very much get everybody in a room together and say they bring all of that expertise into one place. They're not in these silos that the more traditional carriers are operating in. So I think those will be the winners of the future, the ones that can really collaborate well. And underwriters and underwriting is just one component of the whole puzzle really of solving the, how to underwrite, how to risk assess, how to, sell more, engage customers better, all of that. It plays a part in all of those.
And so, Aj, when are we going to get rid of all the legacy systems?
That's a good question. I think if this carries on much longer, they're going to disappear pretty quick. I mean, the point of legacy system, what will happen, I think, is that step change. A lot of existing systems, you'll see, you can't shift the background systems too quickly, and moving off legacy systems isn't a quick process. What I think you will see is the front-end data capturing piece. And the assessment piece and the risk analysis piece becoming sharper and sharper. So I think additional tools, those innovation pieces and those platforms that can provide plug-in adaptable tools that give you that edge. Okay, you can go out and do a risk assessment online. You can plug in something that will analyze 10 different sources of data and then feed into your legacy system. I think you'll see an emergence of those type of companies that sit in between. But yeah, I think this will be a wake-up call for a lot of companies, I would imagine. You see the parallels in all industries. Companies that were, okay, we don't allow home working, all of our platforms, our servers sit in-house, you can only access them in-house, you can't do anything. All of a sudden, you've seen immediately the step change in, okay, we have to open this up. Underwriting should be available anywhere. I can see underwriters now walking around, doing their shopping in Walmart, and assessing and underwriting an application on their mobile. I mean, there is no change that's needed to enable this technology. I think it was a behavioral change. But I think legacy systems, I think there'll be a lot of thinking now around, okay, can they really support this mobile way of working? And I think that will actually drive a lot of the innovation as well. Going forward. But yeah, data science, I think more than now as well, as part of this COVID stuff, is going to fold into that and accelerate the whole thing. So it'll be an exciting time. I think next few months, whilst they're kind of, a period of reflection for everyone, they are also a big innovation opportunity to really make a change to how we work. And really, if you've made the change, I don't see the need for going back. There has to be a real strong justification to say, okay, if we can do it this way, and we're happy with the outcome, then why do we want to go back? And I think that's going to be a challenge as well.
I heard a story from a carrier who was able to send 95% of its workforce remote, and the 5% that isn't, they're considered essential and they have to go to the office because they are working on mainframe systems to process. And so you've got that's a real issue that they never would have had to experience, not in an emergency situation, but can you imagine being an essential worker because you're working on, a legacy platform?
I mean, it was cloud-based platform. It was in the paper yesterday or today about the billions of lines of COBOL code that remain, and that being the cause of the unemployment claims. We have over 10 million unemployment claims in the last 2 weeks in the US. And they can't handle more than 60,000 a day because of the legacy systems out there. And so it's going to be the same thing when we tried to wrap these legacy systems, we tried to put web services on top of them. We can keep putting Band-Aids on it, But ultimately, when we actually have to function in the real world in the future, they really have to be retired. And I think as you as a product manager, you need to get that message out. These legacy systems have
The
to go.
message is out. Legacy systems, yeah, they have to go. I think we agree we have to go. I think the industry needs to pause on that. But me as a product manager, I mean, we're making strides to a cloud-based platform. We are cloud-based, and I think that's going to be the future of underwriting platforms. They have to be mobile.
Yeah, and just picking up Sandeep's point, my son's been trying to file his unemployment claim all week, and every time he gets so far through the system, then it just like crashes or hangs or does something silly. And I was aligning it to him how we used to play text-based adventure games. And I said, you get all the way, and you sort of say, oh, feed the dragon this, and then it says, yeah, the dragon's eating you, and you have to start all the way at the beginning again and go all the way through the process, and then you try and do something different. And I said, that's how it feels. And the frustration when you're trying to work with these systems is just it's driving him nuts. It's driving us all nuts. So I think hopefully if it's a bit of a nail in the coffin for some of this technology, it's a good thing in a way, because it's it's layer upon layer of stuff, but the fundamental sort of lowest point is a very old clunky system that won't really be able to scale. I think it's time to make those changes.
I think we have maybe the last 2-3 minutes left, so maybe we can go around and say, now we are in the window of the future right now. So as we come out of it, you want to give your thoughts on what do you think may immediately change in the industry, or what are the opportunities that it now shows up right after we pass through it, which may be in a year, right? And we really pass through it until we have a real vaccine and control situation here. From a data perspective, process perspective, what are your thoughts?
So, from a platform perspective, I'll do mine, which is kind of, as a product, I see the product I'm responsible for, and kind of similar people in similar positions are looking at, okay, how can we make these systems resilient so they can cope with something like this, in terms of cloud-based platforms that we have are going to become the future. Mobile enablement is going to become the future. I think a lot of assistance around the underwriting is going to really help. But I think the fact that a lot of companies and now underwriters are going to get used to remotely working, that's going to open up the talent pool, first of all. I think you're going to be able to reach out to a much wider pool if you make this remote working, and that's going to become evident. Cost savings are going to drive this. So I think there's going to be a lot of opportunity there for making change. Platforms can have a lot of opportunity. Companies can really look at cost effectiveness. So I see it as a time to maybe look at what we're doing, the change we've been forced to make, and how we can kind of adapt that going forwards and adopt that really as the norm. So that for me is going to be the step change.
So I think that we will stop viewing innovation and the addition of technology and data as a luxury and start viewing it as business continuity planning, right? This is about emergency preparedness. Technology is part of that emergency preparedness. It's not just being able, can my people log on remotely? Can my people function and work? And can my business keep on keeping on? I think that the types of things that we've talked about today have been seen as a luxury and something that R&D unit does in the corner. But that's not the reality we're living now. And I think that'll continue into the future, that this is what has to be done for us to continue to operate as companies and do business.
Yeah, I mean, I would say I'm hoping this is actually a chance to really change the way we engage with customers. And, for a long time we put them through, an unpleasant, painful, drawn out process. And I think we've now got the chance, to really make that change. And I think it's being forced upon us. But, that's one of the things I'm hoping we don't go back to, the way we've underwritten in the past. I hope we do, embrace the newer technologies, a better way of engaging the customers, more direct sales, more, just more accessible directly from over the internet. So I think, this is looking on this as an opportunity and, a chance to really, improve how we do things. And, we've had this long period with a protection gap with more and more people not getting the coverage they need. And I think, if this gives us a chance to address that and move it in the right direction, people are obviously more aware of their own mortality now than probably ever before. So, let's really sort of make the most of that opportunity.
Well, thank you, everyone. I think we're on time here. I think it was a good discussion on as the pandemic spreads, for us to really talk about how it at the same time creates a window of the future. That's the way it needs to be. I thought it was a powerful discussion and I truly enjoyed it. Thank you, everyone, for participating.